Hey guys, welcome back to the channel. In today's video, I'm going to be providing a long-term market update for Ethereum, which is very quickly here approaching a major zone of resistance in that $2,000 region. By the way, guys, I do apologize for the lack of altcoin content. To be honest with you, there's not too many interesting charts out there, and I do think that the best looking charts and the best risk reward ratios right now do remain within Bitcoin and Ethereum. So I'm going to be focusing on that, but if you do have any specific altcoin you want me to cover, please do leave that in the comments below. If you guys enjoy the content, make sure to leave a like and subscribe. So Ethereum again is retesting this major zone of support and resistance. I have that marked out in the $1,900 to $2,000 region in red. And what you can see with this level is going all the way back here to the bull run starting in February of 2021. When Ethereum first tested this level, it formed as very strong resistance. In fact, you can see a very sharp rejection following this first retest, correcting about 36-37% in just the first week. It was also retested as resistance right here in March. And then when the price broke back above it, you can see a very sharp rally taking us up on this parabola-like move to this local high around 4K, later coming back down and then flipping that level into support. So you can see 3 retests for this triple bottom in May, June, and then July of 2021, really just cementing this as support, flipping it from resistance into support during that bull run to later go on and set a new all-time high. But during the bear market, we saw that flip into resistance. On this rally following the lows, we rejected at that level in August, came back down, retested the lows. And we are coming up and retesting it for the second time right now. And again, this is going to be a very critical point for Ethereum, basically because this is sort of the last region where the bears could expect a lower high and a rejection to come back down, roll over, and then continue at the bear market trend. That is not my primary view. In fact, I do think we have formed a major cycle low in this $800 to $900 region. But if the bear market were to continue, this is the last level where we would expect a rejection and then starting to roll over and come back down lower. With the reason being really, if we start to come back and break back above the $1,900 to $2,000 region, first of all, that would set us up into a 1-year high coming back, retesting price action from back here in early May of 2022. And then on top of that, we would also have this massive, call it ascending like triangle pattern, where you would see the rising level of support, the lows rising, demand rising, all retesting this same level of resistance. So we would have that breakout pattern. And in general, you really don't see this type of strength in a bear market rally. This type of strength where it's very aggressive, fast-paced, and then comes up to reject is typical of a bear market rally. But when you get these slower grinds, they're more consistent, they're more sustainable, and this is really just not bear market price action. So if we were to have that breakout, reclaim this, flip it into support, at this point, there's not too much resistance until you get to the next major target in the $2,500 region. You can see that level right here. That's sort of the next major zone. And again, rallying up to that point would be a 3x off of the lows more or less, and that's just not strength that you see within a bear market, and that would definitely confirm a new cycle. For me, that is my primary view. I do think that is the most likely scenario, whether that is to be in the next few weeks if we were to see a breakout, or several months down the line if we were to see an intermediate term rejection and then later coming back up to that level. I do think at some point we will see that breakout, and that will be something that we could look to for the next target up to $2,500, because this zone in between the levels is pretty inefficient. You can see how quick these moves have been, basically declining from $2,500 down to this support in just a matter of a few weeks. All of this fast price action really is inefficient. There's not too much resistance in between, so that would be the next major zone we could look to. And we could look to that target pretty fast when we do see a breakout, if we do see a breakout, just because there's not too much resistance and the breakdown was very fast-paced. The retest was very fast-paced from back here in July of 2021, so there's not too much price action that we can look to in between as resistance where we might stall or consolidate. So that is really where I'm at with Ethereum. I do think that the most likely scenario is a continuation higher on the basis that we have formed a major cycle bottom at $878 from back here in June. And I think this because very much so with Bitcoin, we do have a lot of relative strength. We have higher highs. We have a very clean reversal rounded bottom pattern. And with Ethereum, we're seeing the exact same thing. We're seeing higher lows. We've taken out the highs from back here in October, taken out the highs from February, and we're really just grinding slower at this very sustainable pace. It's not the point where we're seeing a 2x in just a few months like we saw from back here in the summer of 2022, but more we're just having this slow accumulation higher, which is really a positive sign, really something that we do want to see with the end of a bear market. And again, I do think that we are going to be looking out to the upside. Do expect some pullbacks and shakeouts along the way. Again, as the arrow I have drawn here, we could very well have a rejection off of this, come back down, pull back for, say, another higher low. And that could be in the $1,500 zone. And from that point, just expect that that could be a 20% correction. So if you're not expecting that and you were to get scared or shaken out at that point, just realize that's the trend we're working with. The same exact thing happened from back here in March. We had a correction off the highs by about 22%. So if we were to see a correction of that nature coming back down to, say, the $1,500 region, that really doesn't invalidate this bullish argument, this bullish thesis. In fact, we could just look for yet another higher low and then look for a breakout further down the line. If you guys enjoyed the content, make sure to leave a like and subscribe. And as always, I will see you in the next one.